Hello and good morning in Europe, good evening in United States. This is Aurora with another daily outlook video. As you know, in this series of videos, we are looking at the market to see what happened yesterday, what is going on, and what is our expectations for today. It is the last daily outlook video of 2020. First, next one, we will be with you. I will be with you from the second week of 2022. We'll be in holiday, and I will be back from. I will start this daily outlook from the second week when I'm back from my holiday. Hope you will have your this last 2 days. You will have a great days, great trades, and next week also we'll have two trading days and two or three trading days like Wednesday, Thursday, and Friday. Many of the traders they will not be in the market. However, if you are trading, if you are there, if you want to trade in options or whatever that you're doing, hope the best for you. I wish the best for you. But however, I will be with you from the second week of 2022 with many great updates that our IT team working on that, and I will be updated with you with these updates from that from like January, probably January 7th. Okay, to the second week of this gonna be the January 7th, right? Yeah, it will be sorry, January 7th. It's a Friday. I will be with you January. Hello, what's going on here? Yeah, I will be with you on Monday, January 10th. Right. January 10, Monday, I will be with you and hope it feels during this time you will have a great times. Anyway, let's go see that yesterday what happened in the market. We had unexpected uh, dismissing housing data yesterday. Pending home sale, to be honest, I was waiting to see the increasing numbers in the home sales as yesterday I talked about that because pending home sales decreased by 2% in November. Like the interest rates still down in November. Still it was down, while the economic data was actually the economic data were fine. So I was waiting to see the increasing home sales, but still still even now. While the interest rates didn't change yet, and with the market expectations from the great economy, with the increasing income, but more people supposed to be encouraging for buying home. However, it was done. So it was, to be honest, for me it was kind of disappointing. I was waiting to see the higher numbers. This negative numbers from the pending home sale a little bit weighted on US dollar while the market risk also was down, as you can see in the VIX chart here. Look at this chart. This is a VIX chart. VIX chart is down from yesterday. Also, yesterday we were talking was about like 80, 15, 80, even increased till 90 yesterday, but still now we are again back and 80, and even just like a few hours ago we were under 80. 18. So that was the reason, or one another reason to see the market is lower. So less demand for gold for US dollar. While especially after that we see that the less market risk in the market, while US economic data also was yesterday a little bit disappointing with the negative trade balance, with the negative with the weak pending home sales. But on the other hand, we had wholesale investors increased. Wholesale investors and inventories, sorry, wholesale inventories increased. And U.S. crude oil EIA reports for the weekly crude oil also you see that the decrease of 3.57 million barrels for the last week, while the market was expecting to see 3.23 million barrels. So it means that the oil oil inventories decreased more than expectations. So let's go to see the oil chart. That was the reaction of the market to see less inventories than the expectation and the oil in a higher prices. So oil will be around this level, and still we are in, I mean, just like we don't have any reason to see the oil to fall right now. The market is optimist. Economic data is fine. We don't have any restrictions for this coronavirus. I mean, the countries, they're trying to ease their earlier decided restrictions. So the market is still positive. SP 500 yesterday, you see that after touching high high level still it's moving in a side movement. And the market is generally is a positive, and we don't have any reason to see that. Okay, that's why we're going to fall. So but the Nasdaq was a little bit weaker than others, as yesterday we talked about, mostly because of Tishkans. Tishkans, that they were a little bit weak in the last days. However, for now, the Nasdaq by year end is still a 22% increase. The Nasdaq had 22% increase in 2001 from the beginning of 2001. Actually, it's mostly because of the Tishkans and Apple. Just the Apple has this 11% of this 22nd 22%. So anyway, the Nasdaq was despite the last days weakness, the Nasdaq is still also in an uptrend and it's increasing. The Dow Jones, same as SP 500, Dow Jones also after touching previous days high, moving in a side movement, but still in a general trend is an uptrend. About the cryptocurrencies market, as yesterday we talked. For now, again, we are just the cryptocurrencies, they're, especially the Bitcoin, they are back again to the side movement. Still, they are between the side movement between the 46 and 51k. Any up or downtrend need to bridge or bridge under evaluate these levels. The lower than 46k or above 51k. Ripple totally in a downtrend, moving in a downtrend on as long as it is moving under 91 cent. Ethereum under $4,000. It is in a downtrend, and for now, we are expecting even to see the lower digits. About the Euro USD, yesterday US weakness helped the Euro USD to increase a little bit above this level, but still, Euro USD, as I told yesterday in last days, is still in a side movement with a little bit opposite uptrend tendency here, but still the overall trend is a downtrend. And pound, but yesterday the pound is a little bit in a stronger position. Today we will have the housing data from Britain, United Kingdom, and we have to follow that data. USD JPY yen still increasing. We talked about that 14.20 before last week and told that any number about 14.20 means that the uptrend for the yen, because lower market risk means that more demand for yen. About the gold, I forgot to say the gold. Uh, less market risk put the gold under pressure under $1,800. But again, the weaker US dollar increased the gold. Gold, as I told, still we're in a side moment with nowhere to go, and we have to see more reasons for gold to see that if it will increase or not. I mean, for the next direction. For now, for this year, we are at this. For now, the gold will be around $1,800 for today and tomorrow. We don't have any reason to see any changes, any big changes around this. So it will be around same level till year end. This is general the market situation. For today, market will be focused on European inflation number from the Eurozone, from Spain, and then after that, initial jobs claim from United States will be in the spotlights. And tomorrow, many countries will be holiday, but the Chinese it will be the Chinese day today. I mean, Friday, which is the last trading day of the year. Chinese manufacturing numbers for Friday will be very, very, very important, and you have to follow that for, especially for the people, for the traders that they are trading or investing in oil and generally in the energy industry. This is overall market situation. We don't have any specific data or the news to change the market. The market sentiment generally is a positive for stock markets. Thank you so much for being with us. If you have any comments, please let me know. If you have any idea what to cover more in these videos, what you want me to talk more about in these videos, please let me know. And any changes that you want us to make for 2022. Okay, guys. See you guys January 10, Monday. Until that time, have a good days, have a good holidays, and enjoy your New Year holiday.